I just helped this client like save himself from signing a terrible deal to purchase a business. And this was just general information that I gave him. I didn't even look at the financial records of the target company. I just gave him a simple rundown of the things that I would want to look at if I were buying a business. And armed with that information, he walked away from a deal that could have cost him his life savings and put him in a world of headache. So if you're buying a small business and you're not going through a broker who is going to provide you with audited financial statements, then you're going to want to really kick the tires on that business, because if the financial statements are not audited, and this is different than an IRS audit. If I need to do content on what a financial statement audit is, I will, because it's something that seven-figure CEOs need to have an understanding of. But basically, you're relying on data that the business owner, the current business owner, is telling you, and that can be quite dangerous. The first thing I want to look at is if they have a QuickBooks record. I would want access to those records so that I could go through them, look at the transaction detail, and see if they've actually been reconciling their bank statements and things like that. But still yet, if you have not been provided audited financial statements, I want to see the tax return that's been filed for the business, because if they're telling the IRS that they didn't make any money, but they're telling you that they're making lots of money, then there's a problem there, and you have to ask yourself, are they trustworthy or not? Because you don't want to buy a business that you don't know what the true income and expenses are. And then you're going to want to find out if the owner of the property that you're going to lease, if it's a retail space or if there's commercial property involved that you're not going to own, you're going to want to make sure that you have an understanding of who owns that real estate, because a lot of times people will sell underperforming businesses, get rid of those operations, but yet still own the real estate, which is, it's fine, it's legal. But as a buyer, you need to be well aware of who you're going to be paying your rent to. And if you're investing in businesses, make sure that you have a good lawyer on lock that's going to help you with your purchase agreements and explaining how that impacts you legally. And make sure that you have a good accountant in your back pocket as well, who's going to help you understand the tax implications of what you're doing and how it's going to impact you financially and when you can expect to get a return. Basically, it's buyer beware. So if you've purchased a business and you've had a good or bad experience with that, drop it in the comments, because I would love to talk about your stories.